up, we have with us someone who most of you from the Real Traders webinar community know very well, Marc Nicolas. Marc Nicolas is the founder and owner of daytradingzones.com, tradingemini.com, and is a contributor to Real Traders webinar. Marc has been trading for over 2 decades. He got started over at JP Capital, and he was a trader there, and then since he's developed his own trading tools, which gives you support and resistance, zones, and a whole bunch of stuff. Marc's also been mentoring since 2002. And guys, before I bring on Marc, I just want to say one quick thing. Make sure you keep your space because, space is filling up quickly. And once we hit capacity, you won't be able to get back on. So make sure you keep your space. Even if you have to leave, just keep it open. And that's it. So without further ado, Marc, are you there?
Yes. Good morning, everyone. Good morning. Hey, good morning, Justo, Stefan, Bob. Good morning, everyone. Again, my name is Marc Nicolas. I'm the founder of the daytradingzones.com. I've been a trader just like you for almost 20 years. Started trading in the prop shop environment back in the early mid-90s. I was like with the sauce bandits, people that were taking advantage of inefficiency on the level 2 screens, worked for end-over trading, and also worked as a trader for an hedge fund called JP Capital, which was an arm length of end-over trading, with the owner being John Pitak in Fort Lauderdale. I've been trading futures, options, stocks for almost 20 years. The Day Trading Zones is a research and analysis that started for hedge funds and prop firms. Trading is what I do. I trade real money every morning to that date, even though we manage the Day Trading Zones, and we do consulting with the hedge funds and the prop firms. Trading, like I said, has been my passion for almost 20 years. So what I'm going to try is share with you what could help you in an efficient way. Day Trading Zones is a research and analysis firms that gives buy zones, sell zones, and caution zones, where we spend about an hour analyzing futures markets and potential options trade on Google, Apple, the USO, TBT, and TLTs. We also do future trades on CL, mainly CL for me. I don't really trade futures anymore. I have learned over the years the efficiency of the options market. If you guys are interested today, I will show you with about $1,000 in capital requirements how you can maximize that and switch that to be the equivalent of 2 ES contracts. Would that be something you would be interested in learning how you control 2 ES contract with $1,000 by trading SPY at the money options? And I can show you how this can change your life, and also for people who have small accounts, help you to think about your trading in a different light. And so all the stuff I'm going to try, it's difficult to put 20 minutes in a bottle in 20 years of experience in a bottle in 45 minutes, but I'll try my best. So again, the key for all of us is to think about our trading and think that we have a support. See, there's 3 things you have to understand. There's a strong resistance, and there's a strong support, and there's a current price. And we as traders have the choice to either trade a current price at a 50-50% chance of win ratio, okay, or wait for a setup that develops around a strong support or a strong resistance with right shift of momentum and trade setup around your support and resistance to have a higher chance of success in your trades. So nobody puts a gun in our head, yet many traders lose money. And as a matter of fact, 90% of the traders and newbies lose money within the first 6 months to 8 months because they come and they look for action instead of looking at patiently like a fisherman, like someone that prays and wait for its prey to unfold, to wait for those areas where you have a higher chance of success. This to the left, don't be afraid, it's called a bell curve in the option statistics. And the reason you want to understand that is because this is what you want to strive for, a 68 to a 95% chance of success on any trade. Meaning that you want to displace yourself from being a 50-50 trader to a 68-95% chance of success trader. So essentially the bell curve is working with a probability in the money and the implied volatility that says if a stock at a current price of $100 has a 20% volatility, the stock is going to remain in the minus 20% and a plus 20% from the 100, which is going to stay between an $80 and a $120 range. This gives you a 68% chance of success to stay in that range. Now, ideally, you want to go even further from that range. So whether you are a forex trader, a futures trader, or an options trader, it's very important that you think about the fact that you want to have strong support and resistance and not trade at any current price. And I'm going to give you tidbit tricks that I've learned in my professional day trading days before becoming just a trader like you with my own money, where you increase the odds of trading ranges of support and resistance with proper shift of momentums with real money, and also increase the odds of success. See, if you wait, a lot of you guys use monthlies, weeklies, dailies, support and resistance derived from either market profile, Fibonacci levels, moving averages, whatever is it that you use. A lot of people use those, but yet people are not waiting properly for the support and resistance to unfold with the proper shift of momentum. And I'm going to show you how most of the people lose in support and resistance. So just curious in the room, what is it that you guys trade? Just curious, which type of trader that we use and which type of support and resistance do you use? Every hedge fund, every pension funds, every prop firms, every professional trader use action zones to trade. There's not a professional traders, even those guys on the floor like you hear Jack talking, everybody has an action plan around a support and a resistance. This defines and gives you a game plan and a framework to trade on for the day. So let's see what we have, like Louis, futures and options, Mike, Fibonacci, Jill, bond future using volume profile, Valerie, stock, learning options, stocks, gold, forex. What do we have? Fibonacci, well, stock and options, Laurie. So everybody in the room is dealing with high, lows, Fibonacci's, extension and stuff. Yet a lot of people are screwing their support and resistance. So I'm going to show you 3 trade setup and especially 2 trade setup that are working extremely well if you do believe in your support and resistance. And then I'll go directly in our trade navigator and show you charts and show you tidbits that I've learned around over the years of almost 20 years trading money every day. Okay, how I can help you with support and resistance today, the tidbits that you can action on Monday. So here it is. Here's just 4 trade setup, and out of those 4 trade setup, I like 2 in particular, and it is very important that you understand the difference between 1 and 2, because and I'll show you right now the mistakes. Trade setup number 1. Most traders do that pretty well. They look at the support, they look at the resistance, they see the higher lows, higher highs, higher lows, higher highs. They look at their tape, they see the tape going up, they see higher bids, everything is fine. Here's mistake number 1 that most traders make. When they are long and it comes to the resistance point, most traders make mistake number 1. They get out of their long, which is okay, but they proceed to go short right away. And you have to understand that market maker algorithm, everybody, every professional trader knows if you look at a round number, let's say on the ES at 1700, every professional traders are going to know that most newbies are going to pile up their stops around that round numbers. So what they'll do, because they can read the order flow, they are going to run your orders for about like 7 or 10 points. So let's say they run it to 1709. So they run the orders from the retail public, they make it up, and now we reach a neutral point where you see the tape not going up anymore, kind of stay around the same level. It keeps on jerking 1709, 1708, 1709, 1708, 17750, 17750 go back to 0950, but quite cannot gather momentum. That's what I call in physics the neutral point. When you throw, if I am a man, and I kick a ball in an inclined street, a soccer ball, and it goes this way. So initially the first of the kick of physics pushes the ball up, up, up. And this is going to be very profound to help you learn how to read the tape. This is how it helped me to read the tape for the past 20 years. Now, the ball at one point is going to reach what I call a neutral point, everybody. When you reach the neutral point where the ball doesn't go up anymore, where is the ball essentially going, everybody? In physics, you throw a stone in the air. By the force of the air, it's going to go up, 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 and then it's going to slow down. It goes back where? It's going back down. And that's exactly the way you are going to read tape, guys. It reaches a neutral point, and then it cross and recross. So you see, when you take that short at your estimated resistance, you have a 60% to a 66% chance that they are going to run the stops, push it a little higher to a neutral point before they shift, hook, and recross. When they recross the same 1,000 mark, or 1,700, the round number on the ES, or any of the instruments that you trade, future, forex, whatever, bananas in Cuba. Is this the same number? Yes or no? Yet, is it the same probability of success? No. Because now you have the shift of momentum that is in your favor. You have the cross and the recross out. Usually, the best trade that I like is, so number 2, the cross recross is superior to the dash to dash, support to resistance. But now you have one that is even more powerful, which is cross, recross, and the retest. So if the retest is a little higher than your zone or a little lower than the zone, the key is that the retest needs to be lower than your neutral point, the high here. And then you put your stop loss with the high here. This is my favorite trade setup. You have a very high probability of making money with that trade setup. As a matter of fact, for the past week, I've shown all the members I made about $25,000 with those setup on PCLN, Tesla, Apple, and Google. And this setup alone, the cross, recross, retest, lower high, is a killer. Higher low if it's a long. So it's a cross, recross, retest. Does that make sense, everybody? Because now not only you have the shift of momentum in your favor, but you have one more time of a retest before it puke from resistance to support. So now let's go through the last one, which is the one that every trader screwed up. And then we'll go to charts. Okay? So the last one that most traders will trade is the ping pong channel trade. You have a net buyer here. You have a net seller here. You have a net buyer here. You have a net seller here. And here's what happened, everybody. Okay? Here's what happened. Every trader tells you, well, how do I know if it breaks the top of the channel and fly? Or how do I know if it breaks the channel on the downside and tank? Number one, it comes from your pre-market analysis and your morning work. I wake up at about 5:45 in the morning, 6 o'clock in the morning. We do the day trading zones analysis and navigator board with the buy zone, sell zone, caution zone. I'll show you in an instant from the full Pro Tour, and I'll show you an example how it's being derived. And then from there, if you figure out that your higher time frame, let's say for a retail trader, your monthlies, your weeklies, and your dailies are up, okay? If your dailies are up, even though you are towards the top of the channel, if you have a channel here that holds, a channel here that holds, you have a 66% chance on the third touch to have a net buyer and make money going long at this level. Problem is, most retail traders, what they look at the B3 here is a crack of the channel, so they proceed to short. Well, the statistic shows you that 2 times out of 3 already, they were on net buyer. So if you short here, you have a 66% chance of losing. Does that make sense, everybody? Quick yes, no. Especially if your weekly, monthly, daily work shows you that the overall trend is up, not down. Now, if your overall trend, and you look at you don't look at the leaves, you look at the entire market from an airplane view. You want to look at the airplane view. If you look at the airplane view now, and the overall monthly, weekly, dailies, and all your work shows short, then if you trade the top of the channel and you short on the third touch with a stop loss on the high candle of the third touch, now you have a 66% chance of winning. So what I do is I take 50% of my size here at the top of the channel. When it recross your resistance, in our case, our dashes, I add another 50% of our size. So in all actuality, my average is in the middle. Is that clear, everybody? Because most traders lose because they chase the break of the channel on the downside or the upside. When you understand net buyer, net seller, cluster high, cluster low within the framework of your monthly, weekly, daily analysis trend line and trend and stay in the trend, then you'll make money. What do I mean by that? Let me show you. Let's go through a trade on the full Pro Tool on Apple. Let me put Apple, or let me put the crude. It's fine. Let's put the crude. I don't care. I had a crude on. So let me show you a little bit the full Pro Tool, how they work. You have an up arrow, meaning immediate shift of the trend. So you have a cross, recross, like I told you. You have that retest higher low, number 3. We recross the dashes. We fly dash to dash. We recross the dashes. We retest the dashes, lower high, number 3. Dash to dash. We come back again, lower high, dash to dash. And then they proceed to go. Now we form a channel, everybody, on the crude. And now they do again, cross, recross, retest, lower high, because those dashes are real time. They change. What I'm showing you right now is on e-signal, and I'll show you on right away on Ninja, that those moves, those are not a screenshot that I put just to be pretty here. Does that make sense, everybody? Quick yes, no. Okay, cool. So what happened here is you see again that shift, cross, recross, retest, fell, vroom, 108 to 96. That is a $12,000 per contract move on the crude. Does that make sense, everybody? Yep. So what's his name? Ronald say, is that a head and shoulder? It's not a head and shoulder. What it is you have to look as far as possible that this is a channel. This is your channel that I was talking about. See, you have a cluster high, cluster low, cluster high, cluster low. You went from blue dot to down arrow right there to pink dot, which indicate a 60% chance of the continuation of the move from resistance to double dash support. $12,000 a contract. Okay, so this is extremely important that you understand that, everybody, because whether you trade your own support and resistance, those patterns, those trade setup are crucial to indicate the shift. And when you have the shift, you increase your probability of success. Okay, so let me show you another important concept in your trading. Apple. Let's look at Apple weekly and let's look at 3 years on Apple. Okay, so again, for the people who are, how do you call that? People who are also not just day trader but position trader, look at this beautiful chart on Apple. In 2011, cross, recross, down arrow, up arrow. As a matter of fact, let me show you because it started in 99. Can everybody see the entire, since 2008, the progression? I just want to show you the shift of momentums, how they work. Do you guys see that? So here's what happened. You go from a situation of a down arrow, immediate trend down, to a 60% chance of continuation between 200 on Apple to about 90 on Apple in 2008, 2009. You change again the momentum with an up arrow, with a 60% chance of continuation of a trend on the upside with the blue dot, and 2009, 2010, 2011, 2012, this made from about 100 to 700, 7 times your money. This went 700 times. There has not been 1 week from 2009 to 2012 where you have a pink dot printed. Can you guys see that? Because it's very profound. See, so the trend was there. So what traders do, if you look at your own charts and your own system and your own process, when the trend is in place, which I had the trend in place, up arrow, blue dots, what you are supposed to do as a trader to increase the probability within the setup that I show you, which is the cross recross of the zone, the retest higher low, room, new high, or the cross recross at the top, retest lower high, new low. What you have to do is stay in the trend. When you see that trend, higher highs, higher lows, you see that little flag here, you see that little flag here, you see that little flag here, little flag here. You are better off. You are better off, everybody, buying, 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 because you stay in the trend. Does that make sense, everybody? The biggest mistake people can do, the biggest mistake people have done with the Tesla, the Netflix, the Google, and the Apples is people want the top. People want to get the top, and people want the bottom. You don't need to trade like this. It took me many, many years, even trading millions of dollars for the hedge fund industry and the prop firms, to understand I don't need to get every turn. Your wife and your significant other one couldn't care less if you do 1, 2, 3, 4, 5 trades in 3 years or 5 years versus doing 130 trades in 3 years or 1,300 trades, paying your broker $50,000 a year in commission, okay, taking more risk, more stress, and staring at a screen, where this, in fact, is a much more efficient way of accumulating wealth with options and be a millionaire. You are not going to be a millionaire looking at every turn. I'm telling you. And how do I know? Because I accumulated about $1.2 million in trading in 18 years before I went to a nasty divorce last year. Do you understand, everybody? Quick yes, no. The people like Jim Rogers, Soros, they don't trade every turn. They pinpoint the trend and they stay in that trend. And we as trader and day trader needs to be the same and doing the same. Okay? See? Here, 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 here. You do not go counter trend, everybody. And then when you know that and you look at an Apple, now you go to the 60-minute chart on Apple and you look at the day trading zones on Apple and you look for places of re-entry to kill it within the trend. So I called 2 weeks ago in a video just before when it happened, actually, that to buy and look at the 47 and the 60 on Apple. That was what I call a perfect cross, recross, retest, room on the 60. So you stay on the trend, because even if you have little pink dots there and there on the 60, the monthly, the weekly, the daily shows you up. If those shows you up, then when you go as a day trader on the 60, guess what? You switch back and you stay in the trend. So you wait for the cross, recross, retest. This is a great buy here. It goes up. It retests again here on the 74. Retest here again towards the 510, the open price and the dashes last week. You re-enter and you stay in the trend. And I'm telling you guys, it takes many, many years to understand that. Many, many years. Does that make sense, everybody? Quick yes, no, because this is powerful. Now I'm going to show you some day trade on our trade navigator, because when you understand that, I promise you, you are going to save yourself a lot of heartache and a lot of blood and emotional distress. I repeat again, everybody wants to trade the up and down on a daily basis. If since September 19, here, September 19, you would have only bought the retracement on Apple 1 time, 2 times, 3 times, and 4 times, what do you care if you don't trade every day? Does that make sense? Because at the end of the day, when you are going to look at your wife and your kids around the table, your wife and your kids are not going to tell you how many trades you've done today and how active you've been for the day, guys. She's not going to ask you, my ex-wife used to tell me, are we going in vacation? Or are we going for dinner tonight? Okay? You are not being paid as a business here by the numbers of trade that you take, and you are not being paid here by paying the brokers all day long. You are being paid by staying in the trend and re-entering your trend with a high probability shift of momentum. And this is going to be huge for you guys. Justo, I'll be glad to analyze any charts that you guys want live. As a matter of fact, I have a session live on this Tuesday at 12 o'clock. It'll be during the live market. Anybody is welcome to come. If Kevin posts the link later on for now to get our free report on mastering support and resistance and get our training videos. I have some training videos that you can get for free with the link that Kevin will give you guys that shows you how to pay yourself, the proper expectations, and all of those videos have been done in real money to show you that not only I say it, but I put my money where my mouth is. I do it. And I do it because I believe that for educational purposes, it is extremely important that you listen to a lot of people. And this is why I love being one of a very active contributor with Real Traders webinars, because they are looking for guys that trade every day, people that breathe and like the markets every day, people that really do it. Okay, so we'll have this on Tuesday. So again, this is key that you stay within the trend. And when you understand that, it's key. So now let me show you a blank chart and show you tidbits that can help everybody without this. So just also on the trend navigator. Let me show you the trend navigator here. So if you look at the bonds, for instance, look at the bond market here. So the trend navigator that we use here, I use a dedicated screen every morning just for the trend navigator. And the trend navigator helps me quickly recognize the cross, recross, retest within the trend. It helps me, like on the bonds, cross, recross the sell zone, retest the bottom of the caution zone. The caution zone is the orange lines. The sell zones is the red lines, and the buy zones are the green lines. So he helps me quickly identify those trade setup for maximum power. And those 9 markets, we have 9 markets that we analyze where we substitute ES to trade SPY option, and I'll show you in an instant with about $1,000 how you can control 2 ES, about 2 ES. And instead of trading $10,000 per contract on the ES and using $20,000 in capital requirement, I'll show you how you can use 19 times less money, have a better return on investment, same risk with $1,000 on the SPY weekly options in about 10 minutes. I'll show you how to do that. And then we'll pull an option chain. So here I trade Apple options, Google. On the CL, I trade CL or USO. NQ, I don't trade. YM, I don't trade. I look for synergy with the ES. Bonds, either I trade the bonds, but I don't day trade the bonds. I position the bonds, or I do TBT, TLTs options. And so all of it is about looking for shift of momentum. So let me show you a white chart, a complete white chart where you guys can use some tidbits that can be extremely powerful in your trade. And we are going to use that. Let's say we'll put an ES chart or an SPY chart. So new, advanced chart, default chart, completely white. Can everybody see that? And I'm going to share stuff you can use on Monday, regardless if you have the tools, as long as you have strong support and resistance, that can help you. So here we go. If you look at the chart of Apple, even Apple, if you look at the chart of Apple, I told you before, you're looking, if you don't have strong support and resistance where you look for that cross, recross, retest, higher low, like here, see, retest, higher low, boom, within the trend, there's tidbits that you can use just on the white chart, blank chart. And that's pure price action, everybody. So whether you trade Forex, options, or futures, and again, I'm a big believer that you should have all the tools in your toolbox to trade what I'm a strong believer that options and futures, the combo of futures and options are the way to go. But I do some Forex trade too, but it's not my main thing. So look, if you look at this, can we all agree that for the past few months, Apple had some net buyers here, then they crack it, they came back, net buyers here, net buyer here. Quick yes, no. Just visually on the chart. Yep. Quick yes, no. So you traders, as it goes, you can create that shift of momentum where you do cross, recross, retest that cluster of buyers, and boom. So quick question, did you need any tools to enter at 420? Yes or no? In retrospect, look at the stuff. Did you need any tools? See? And other questions, but did you need the trade setup I just gave you? The cross and the recross and the higher low on the cluster. Did you need that setup? See? See how that setup can change your life, everybody? This setup changed my life and changes my trading. And beginning Monday, it will change your trading when you think about the Frenchman here. So here, now you do the same here. Now we look for an area where there's a net buyer, net seller, and you see that this area has net buyer, net seller around, what is this? I don't have my cursor for some reason. Cursor, show property, show axis, and I'll breathe better. So now I go here, 465. Did you need anyone or any tools to see this cluster break? Yes or no? No. So again, what you don't want to do is chase that break. Even that break was good for 460 to 410. You want to wait for the retrace. The retrace come and recross that cluster, you are in. This time you have a very high probability re-entry right there. Does that make sense, everybody? Quick yes, no, because this is very profound for everyone. Okay, cool. So this helps you. Now, I'm going to give you another tidbit. Do you want another tidbit within this that doesn't require any tools that can change your probability of success? One more. So now, a lot of the traders, when they trade support and resistance, they chase the break of the clusters. They chase the break of the cluster and they reduce their probability of success. Let me show you here on the full day trading zones tool, pro tool. And by the way, from the full day trading zones pro tool, I derived the action zone by zone. I do that every morning with a commentary, what I'm looking for, what I'm going to trade, what I have traded, what I showed some screenshots. So either it's me or Mike, a 30-year trader, or Jack. So what happened here on the Trade Navigator, all this work that takes about an hour and a half for us to put together every morning by 8 o'clock for our members. We have hundreds of members. What happened here is we go here, okay? I go back to the full Pro Tool, and this is how we derive it. So look, we'll use what? We use a MACD. So we look at the tools, and we look like for the day, the immediate trend for the day, and we look for what? We look for the entire work. Up arrow, blue dot for that day is the trend, immediate trend, waking in the morning is up. Up MACD, slow MACDs, you can use those, are great MACDs, 619.9, the slow one, and the 1226.9. Ideally, when both MACD, the slow and the fast, are in synergy with the up arrow and the blue dot, look at the nice move. You got a 516, 536 move for the past 3 days, 20 point up on Apple. Does that make sense, guys? Quick yes, no. Because this is a move on Monday alone, I made about $7,000, $6.9K. Okay? And that was just on Monday. Okay? So it is very important because that you can use, that you can use. So here's the problem of most trader. Okay? Most trader, if you have a support at 516 retest, it's a cross, recross, retest of the 516, 515 here. If you have a 515 zone to a 528 zone, how many point is that? 516, 528. How many point is that for everybody? Da-da, da-da. It's like the game. Okay, so it's 12 points. So I give you a trick that I learned early on. You take that range, that 12 points, even if you don't have any tools. You take that 12 points and you divide by third. So by third, 12 divided by 3 is 4. So you do 516, 520, 520, 524, 524, 528. So the rule is as follows to avoid chasing any Forex options and futures, even though I will show you the power of options in 5 seconds. I have about 15 minutes left today to present 20 years of work. So can you guys see that quickly? You divide your range by thirds. So here's what happened, everyone. Who trades Forex here? And they say, hey, I don't care about this guy. He trades Forex. Who trades Forex here? Me. Doesn't matter if you trade Forex. As a matter of fact, I'll show you also the power of options with Forex. You need, the more tools you have in your arsenal, the better. You know, there's great Forex presenters coming today. I think it's Rob. But you want all the tools in your toolbox. So now look at this. If you divide that by third, well, whatever that you trade now, whatever that you trade, if you miss the cross-recross and it starts flying on you, you got to know statistically wise within an uptrend that you want to get into the first third. If you get between 516, 520 with a stop loss on your support, you have a 66% chance that you'll be okay. But the key is to put the stop loss on the support. It might be a wide stop loss. Okay? But if you start chasing the 2024, the middle part, or the top of the middle part or the last third, you have a high probability of being stopped. Does that make sense, everybody? Quick yes, no. So it's a little trick that have helped me for many years, okay? For people that don't have tools, that don't have the day trading zones tools or the day trading zones action zones, buy caution zones, to use with the cluster high, cluster low, the trade setup, plus divided by third, because now I gave you three things today that you can action on Monday with no tools. All I'm asking is that you come, see what we do, and see how interesting it is to help you in your trading. See, because now you have the trade setup. So trade setup, number one. Well, number one is direction, the trend. I told you, you wake up in the morning, you do your analysis. 2, the trade setup. 3, trade in the third within the 4, which is the cluster high, cluster low. Okay? You do those 4, guys, those 4 steps. I guarantee you that your trading will be much better than what it was yesterday, Friday. Does that make sense? And these are tidbits, I'm telling you, for 20 years. They are simple, they'll change it, and they'll help you really doing well. The things that you're missing after that is the proper sizes, the proper segregation of account, and everything. Okay? So yes, those tools, Joseph, works for everything. They work for futures, Forex, and options, the full pro tool. Otherwise, we do the analysis only on those 9 markets. So now let's go back to the presentation, and let's go quick because I think we'll have no questions again. Time for questions. Can everybody see the slide again? Okay, so we have to get moving, guys, because Kevin is going to get me out in 10 minutes, and I want to share a concept that can change your life. So now let me show you a concept that is very important. Who is a futures trader in this room? Who trades only futures? Okay, so we have quite a number of futures traders in the room too. Okay, so now here it goes. Look what happened. You got to know the equivalents. Every trader knows the equivalent. Okay, this is very key, everybody. Everybody needs to know the equivalents for maximum use of capital. Maximum use of capital. Remember, our goal as a trader is as safely as possible to go from here to here in our equity curve. Even if we go sideways, you want, with the higher probability of success and the best use of capital, going and increasing your capital and protecting your capital. That's your main goal. Protecting your assets, your capital, and increasing your assets. So one way that you must consider is what is the best instruments to trade with the highest potential of return with the lowest risk. Okay? So here it is. You got to know this equivalent. 2 contract of the ES equal 10 out of the money contract of the SPY weekly option equal 1,000 shares of the SPY. If you buy 1,000 shares of the SPY right now, 175, 174, you need $175,000. Okay? Now, if you trade 2 ES safe $10,000 a contract, you need about $20,000. Now, if you use 10 contracts on the SPY at the money weekly options, they are usually around $1, and that is only $1,000 in capital margin requirements, everybody. Okay? So now, yeah, but Fred says something that's super dangerous. That's how people blow up their account and say, oh, but the broker allows us to trade one contract of the ES with $500. I assure you, if you do like most of the day trader, putting a 2-point stop on an ES, which is $100, and you risk $100 with a $500 capital, that's 25% of your account that you risk. You do 4 trades, and you are gone. 4 trades, you are gone. 4 losers, and you lost the entire $500. Does that make sense, everybody? Quick yes, no. Whereas here, I'm using $1,000 out of my $20,000. I'm risking the same 20 cents for 10 contract, which is $200. And I'm risking on the ES $100 a contract, which is 2 contract here because this is the equivalent of 2 contract. And I'm risking the same $200. But guess what? Most of the killer people on ES, they'll make 4 points. Most of the people that are really good trading ES will make 2 to, let's say, 4 points or 6 points or whatever. Even if you make $300 a day per contract on ES on a $10,000 contract, it's only a 3% return on your capital. This is shit comparing to this, everybody. Because here, if this thing moves 40 cents to $1.50, which it does almost every day when the SPY moves about a point, then you make 40% to 150%. So you make about 10 to 15 times to 20 times more money with 19 times less capital trading the SPY weekly. Is that powerful, everybody? Quick yes, no. Because this is huge. This is huge. This can change your life if you right now are only a futures trader. This is huge. This shows you the proper use of capital to crush it. See, let me show you now. It's not just theory. Look at one of my broker accounts. Can everybody see the account? Quick yes, no. Yesterday, the SPY closed at 175.81. If you look at the out of the money, as close as the money possible, call options, look what they are being asked for $1.17. Is that close to the $1 I just gave you? If you look at the as close as possible put, they are bid $1.01. Yep. So it's not just a theory that I'm giving you guys. This is real practice here. Practice that I'm doing every day with real money. Does that make sense? Because this changes your life. If you can control with $1,000 2 ES that you would use 20K to be safe with a stop loss here of $200, which is 2 points per contract, and here 20 cents, $200, and here you make on average only 3 to 5% return on your money. If you are good, I'm saying you are one of the best traders, and here you make only 50 cents to 80 cents. Now you make 50% to 80% return on your money. Is that powerful, everybody? Yes or no? So the next question is for everybody is, hey, but you just said when we started that you are futures and an options trader. Yes, I use futures mainly for hedging intraday, because if I'm stuck in an options position intraday, and let's say that I am overall delta long, meaning I'm long the market. If I'm overall delta long the market, and I have a long position for $20,000, and that there's a bad news, there's some black swan overnight. What I have is I have at all time about $30,000 in the futures account. Now I can hedge because the futures market is open 24/7. I can hedge the gap up. Does that make sense? So instead of being crushed the next day at the gap, I'm using this and I am switching to the futures to either finish break even when the gap opens with my loss, or I hedge it just to even be profitable. If I buy enough contract and before the market opens, I might still be profitable on the other things. So it is very, very important that everybody understand that futures are a great way to hedge your option strategies intranight, number one. And number two, I like the crude because the crude moves very fast. You've seen on the tools, they moved about what did I show you? $14,000 a contract. So $14,000 a contract, I'll take that all day long. Okay? So this is powerful. Now, if you trade options, there's another thing that you need to consider with your support and resistance and how you make weeklies and monthly consistent stream of income. Would you like to learn that? Would you like to know why most traders in options lose money? Why is it that most who in the room, just curious, have tried option and lost a shitload of money trading options? Say me. Say me. Because a lot of options traders don't understand yet really where the money is and how the professional trades options. And you'll understand that when I do those directionals against the futures, the beauty against the futures, when you do those directional weeklies that I just showed you, you do not need, and that's the beauty of this, you do not need an account that is bigger than $1,000 to $2,000. So beginning tomorrow morning, if you are a losing trader right now, you are a losing trader, and you spend hours and hours trading and you're not even paying your bills with it, okay? Well, I have news for you. Get out your money from all your futures accounts and practice only on $1,000 and $2,000 on the SPY. Small sizes, 2 contract to practice a runner. And guess what? You can refine your skills with only $1,000, $2,000 on the SPY option. Why the SPY options and not the Google options and not the Apple options that are crazy move every day? I tell everybody that I train, you got to wait a year to a year and a half before you touch the Googles and Apples. Because look at the spread here. Look at the spread on the out of the money options on the SPY. 1 cent. 1 cent. This is a very tight bid. There's a lot of volume. This thing is not manipulated or not easily manipulated. There's no earning manipulations where the volatility goes up, goes down, and crush like a Google. Boom, 100 points. This is more the ground where most of the hedge funds, and I still have friends from the hedge fund industry that I work with that works just SPY IWM in hedge funds that just do SPY IWM options because you don't get crucified. No, look at the Google now. Look at Google. Look at the spread on Google, everybody. Look at the spread on Google. If you look at the spreads on Google, here they are, look at this one, 70 cents. Does everybody see that? 70 cents versus 1 cent on the SPY. You automatically, when you trade the Googles and the Apple is a little tighter, but Google, you automatically lose 3 to 4% of market maker spread between the ask and bid spread. So even if you are wrong right away and you want to get in and out right away, you lose 3 or 4% of your capital. Is that a sucker's game? Yes or no? Is that a sucker's game on those? Sure, it is a sucker's game. But now I'm going to show you how you make it a winner's game quickly before I get interrupted by Kevin because my time is almost over. You flip the card, everybody. You flip the card from 90% of the trader losing to greater than 60% chance of success on any trade by doing what? Selling the options. You have to understand that an option has 3 components. So this is, let's say, a $1 option. The options, what most traders don't understand, and the people who have lost buying options, they don't understand that properly. There is a real value of the options above the strike price. Okay, so let's say the strike price is 175 on the SPY, and let's say we are at 175.10, then your real value is 10 cents. So if the option is $1, what are you paying $1 when the real value of the option is 10 cents? You're paying for, let's say, time value, 80 cents, and let's say you pay for an extra 10 cents in volatility. Okay? So what happened is the reason the buyers are fighting against a lot of things is that the buyer of option is fighting against the volatility, right? They are fighting against the volatility that crush. And if you do the weekly options by Friday, the entire time value is gone. So essentially what you've done, you are the sucker who buys a $1 asset no, you essentially buy a real value asset of 10 cents for $1 because the time value will dissipate by expiration date and the volatility might start decreasing. Does that make sense? This is why it's so hard to make money buying options. But when I buy SPY, I am in and out. I don't take intranight, and I substitute those to the ES with a small account, like I told you, $1,000, $3,000. But what you have to do is if you know that this asset at $1 is truly worth about 10 cents or 20 cents by the time the time value is done, who is the winner then? The buyer or the seller of the option? Who is making weeklies and monthly income on the pension fund side, hedge fund side? All the professionals, are they the buyers or the sellers of options? When that time value is decaying to nothing by the expiration date, is the seller. And when you understand the theta decay of an option, Monday, Tuesday, Wednesday, Thursday, Friday, everybody, that time decay is a little bit like this and start accelerating. When you understand the impact of time decays on the weekly options, then you start creating weekly income and monthly income on the monthlies. And this is extremely powerful, guys, because that changes your life. So I hope what I've been able to share with you today has been powerful for you guys. Those are the stuff, you know, in almost 20 years of a career in trading. And like I said, trading is almost all I've done in my life. I was a product manager, when I was what, 19 and 20 before my business, during my business school, and trading. Besides that, all I've done is trading. This changes your life, those concepts. And unfortunately, we cannot put 20 years of knowledge in a bottle. I'll have a live event Tuesday at 12 o'clock if you guys are interested. I think Kevin will give you a link on how to get our free report on mastering support and resistance, and also training videos done with real money that shows you the impact on the importance of paying yourself, proper expectations in futures and options. And I think you'll find it interesting, everybody. And it's a free report and a free training series. So hopefully you learned something and you can action those steps that we show you today. You have a great day, great weekend.